Welcome to another S&P 500 analysis. Looking at this monthly chart of the S&P 500, as you can see, August was a down month, but also notice if it wasn't for last week's salvage operation, the month of August actually would have been much worse. It would have been down at its lowest point of 5.5%. Instead, after last week, a little bit rally. Basically, I call it a salvage operation here for the fund to salvage their fee, and it only down 1.77% for the month. So as you can see, there are a little bit of shenanigans going on at the end of the month. So what should we be expecting for the next couple of weeks, especially in the month of September? The first thing is I'm expecting a pullback, and I'm calling this pullback a critical pullback, depending how this pullback, react after it get to that point. And we could be looking at a trend reversal, or we could be looking at a higher high, taking out the July high, or we could starting another downtrend and move back down toward the March low. So stay tuned. Let's take a look at the indexes performance, and here's the column for the month of August. As you can see, all the indexes are negative, finished the month of August negative, but the NASDAQ lost the least. It only lost 1.62% for the month of August, but the Dow Jones Transportation and the Russell 2000 at the bottom of the list, they both lost more than 5%. So here looking at the week-to-date performance here, we see the NASDAQ 100 is the best performer for the week, gaining 3.67%. Followed by the Russell 2000, 3.63%, and then the NASDAQ Composite, 3.25%. The S&P 500 finished the week with a 2.5% gain, and the New York Stock Exchange Composite, a little bit over 2%, Dow Jones Industrial, 1.43%, and the Dow Jones Transportation, 1.41%. So you can see for the week, all the indexes are positive. And looking at this weekly chart of the S&P 500, as you can see, the range for the week was 126 points or so, and it gained 110 points at positive 2.5%. It closed above the 10-week and the 40-week moving average, and also it is continuing this one-time framing up on a weekly basis, and it's been up for 2 consecutive weeks. Now let's take a look at this sentiment. See that the S&P 500 been up for most part of the week, and it ended up, for the week. And you notice that the VIX been coming down throughout the week also as the market rally back up. And the put call ratio actually on Thursday came down to 0.66 area, and now it's back up to this 0.75, back into this zone. So the market participant is not fearful at all. But it also is not always on, although it was trying to get always on Thursday. But today, on Friday, kind of get back into this cautionary mode here. And looking at the up-down volume ratio, we only saw Thursday, we saw a negative up-down volume ratio, and it was down 1.46 to 1 in favor of the down volume. Also, we saw a little bit of a negative advanced decline, with 134 more declining issue than advancing issue on Thursday. Other than that, throughout the week, it was pretty positive, and we got quite a broad market advance on Monday and Tuesday. And the 52-week high and 52-week low, we notice that the 52-week high is coming up the last few days. We see that it's over 100 on Wednesday, and was pretty close, up here at the 80 level here on Thursday, and then today on Friday, there were 116 stock make new 52-week high versus only 31 make new 52-week low. So the 52-week high versus 52-week low is coming back up a little bit. So that's a little bit of an encouraging sign for the bulls. And here on the cumulative AD line, we see that the cumulative AD line in the New York Stock Exchange coming up along with the S&P 500. So there are no divergences. And look at the NASDAQ market. The NASDAQ market also performed quite well this week. Only Thursday got a negative up-down volume ratio of minus 1.1 in favor of the down volume. Other than that, throughout the week, it was pretty much in favor of the up volume, with Tuesday being the strongest day for the week for the NASDAQ market at 5.79, almost 5.8 to 1 in favor of the up volume. And also, there were market participation on Tuesday and also today. Although today the NASDAQ 100 closed down about 0.07%, but notice that the advanced decline, the advancing issue actually outnumbered the declining issue by 1,094, and also the up-down volume ratio was positive 1.7 to 1. So that's an encouraging sign. And here on the new high, new low in the NASDAQ market, you notice that the number of stock making new 52-week highs coming up. Today, actually, there were 103 stock make new 52-week high versus 94 stock make new 52-week low. Now, we did see a little bit of a positive divergence here on the short term on the cumulative AD line versus the NASDAQ 100, but we still have this little bit longer term negative divergence that we need to resolve. Let's take a look at the month-to-date performance on the 11th sector. Last month in August, month of August, the energy was actually the strongest performer, and that is the only sector that actually closed with a gain, ended the month of August with a gain, and it gained 1.65%. You can see that it is up for the month. And the next one is healthcare. We see healthcare pretty much unchanged between July and August here. Now the technology actually came back up and it's only down 1.5% for the month. But if it wasn't for this week's rally, it would have been down much more. You can see the intra-month here, the month low was way down here. And if we just kind of take a little bit of a measure, and it is like at one point it was down over 8.5%. And the communication was also down. Once again, it was because of this week, it helped push it back up. Otherwise, it would have been much worse. It was down 1.5% for the month of August. Here is consumer discretionary. Also, you notice that this long bottoming tail, again, is because of this week's rally that it pushes back up. Otherwise, it would have been worse. And it ended the month down 1.74%. And likewise, for the industrials, down 1.98%. Financial down 2.69%. And here's the real estate. The real estate is down over 3% at 3.06%. And here's the material down 3.3%. Consumer stable down almost 4%, down 3.95%. And the worst performer is the utility, down over 6% at 6.13%. So as you can see, the consumer stable and the utility, two of the defensive stock, is actually the worst performer for the month of August. Now looking at this yield curve here, this 10 versus 2, we see that it is still negative at 0.7. So it is still pointing to a sign of a recession. And looking at the 10-year yield, we did see the 10-year yield pull back to somewhere near this 4%. But then on Friday, it moved back up at 4.172%. So for the coming week, I probably expect it to continue to move back up to this 4.2. If we could take out this 4.2 and get above it, we could see it come back up to this 4.3 and possibly make its move toward the 4.5 level before the next FOMC meeting. Looking at the US dollar, we did see the US dollar pull back a little bit this week down to this 103 level, but on Friday, it came back up and poke above this 104 level here, 104.26. I'm still looking for the dollar to come back up to this 105 area, this 105.80 near this pivot high. And here looking at the dollar future, we see that it came up to this composite point of control. So again, I'm basically looking at this 105.85 area, this low volume zone here. And we see crude oil continue to move up. Like I said, I'm looking for crude oil to come up to this $90 level. Right now, it is above this composite point of control and above this 83 area. And today, on Friday, it closed at 85.55. It was up over 2.3%. And for silver, we are looking at silver pulling back a little bit down to this composite point of control here. I'm still looking for this thing to possibly bounce around and break this trend line here and come back up to this 2670 level. And gold got a nice bounce a couple of weeks ago off of this gap fill here. Right now it's back up at this 1970 level. So I'll be looking for gold to continue to push higher in the coming week, back up to possibly to this 1995 area here. Now let's take a look at the indexes. On the daily chart here, we see the SP 500 booked this little bit of a double bottom here and came up to this 4515 level here. So for the coming week, I'll be watching for the possible pullback, maybe come down and check this 4455 area, this pivot here for this W, this double bottom pivot high here, and see would it be able to find support if it pull back down. But I'm looking also on the upside is to come up and fill this gap. And if it does fill this gap, then we're basically looking for the S&P 500 possibly move up to this 4600 area. And for the NASDAQ 100, likewise, it broke above this pivot high here. There's a little bit of a double bottom. And right now it's coming up here to try to fill this gap. It partially filled it, but we're still looking for it to completely fill this gap up here above the 15,650 area. So if it could come up and fill this gap, then we'd be looking at the possibility of possibly moving up to this 15,800 area and even get up to near the 16,000 area. Now, if it pulls back, then we're basically looking for this level here at 15,265, this pivot high, as a back test here on this pivot, on this W pattern. And if it doesn't hold, then we'd be looking for this thing to come down to somewhere around this 14,800 area. Now, notice the Russell 2000 came off this double bottom nicely, and it just surged right to this 1900 area and into the 1925. So be watching, would it be able to push up to this 1960 area here, where these pivot here, right around this 1950, 1960 area. So on the downside, it's possibly come back down and maybe check this 1875 level here, these pivot here on this double bottom. And for the Dow Jones Transportation, we also saw the Dow Jones Transportation got a nice bounce off of this 15,650. And right now it's back up here near this 15,900. So we're going to see, would it be able to push above the 16,000 in the coming week? And if it does, then we'll be looking for the possibility of moving back up to the 16,200 area, this low balance area here. And if it come back down to this 15,650, then we'll be looking at possibly testing these lows once again at the 15,500 area. And the Dow Jones Industrial also got a nice bounce off of this 34,300 area. And you see right now it's trying to get it back above the 35,000 level. So for the next week, if it could get above this 35,000 level, then I'll be watching for it possibly move up to these pivot high here near the 35,500 area. Now, if it pulls back, then I'd be looking for the possibility of coming back down to this 34,300 area once again and try to test here for the potential support. And finally, the New York Stock Exchange Composite Index, it also came back above this neckline. Remember, this is the neckline of the inverted head and shoulder pattern, and it came back down, and right now it's moved back up. So although this inverted head and shoulder pattern might not be valid any longer, but we're still looking at some of these key level, and one of them is this 15,969 or 16,000 level. So right now it is back above the 16,000 level, and we're going to see would it be able to continue to move up, get above the 16,200 and into this pivot here somewhere around 16,320. Let's take a look at the ETF, starting with the diamond. Before I do that, I just want to leave you with this table here with the upper range and the lower range for each one of these ETF for the coming week. So you might want to pause the video and copy these values down. Now let's start with the diamond, the ETF for the Dow Jones Industrial. Now next week, I'm basically expecting some sort of pullback because last month, near the month end, we had this strong rally back up and sort of salvaged the month of August to a certain degree. if it wasn't for last week's tremendous rally back up, the month of August would be much worse than the way that it finished. So let's take a look at the diamond. Here's what I'm looking for the coming week is possibly come down here and pull back into this low volume zone and possibly tag this lower range of the expected move and see what it get a bounce off of this trend line here, and then it bounces back up and try to take out this high here eventually. So that way we will continue this higher high, higher low, this uptrend here. Okay, now the other scenario is that it will basically just continue to push up higher and take out this high here. So you got this higher low, higher high, higher low, higher high, and higher low. So you maintain this uptrend here. So that's why it's critical when we look at the pullback for the coming week. And that's why I call this pullback will be a critical pullback. If it doesn't hold and it come down to this low volume area, basically we're going to come down and tag this high volume zone here and then come back up and encounter resistance and push back down. Then all of a sudden you are looking at the Dow Jones Industrial ETF, the diamond, forming a lower low, lower high, and a lower low. So now you're starting this reversal, and it could come down and take out this March low here. Let's take a look at the SPY. Again, I'm looking for a possible pullback. It will be critical, just like the Dow Jones Industrial. Here is this double bottom per se, right? And, it came up here and got a nice bounce up. So right now it's trying to fill this gap. And basically what I'm looking for in the coming week is the possibility of come back down and possibly test this pivot high here, this pivot breakout, and see will we get a support and then push this back up and take out the recent high. Okay, so that way it will keep this, maintain this uptrend here. Now, if it come down and unable to hold this pivot, then I'm looking for this thing to come down to this 430 level, this low volume node here, this low volume zone, and possibly come back up and maybe double check this, back test this pivot, and then push it down and fill this gap down here at 420. So all of a sudden we are looking at a lower low, lower high. So now we are looking at a reversal downtrend, and then we probably be looking at a move down toward the March low. And look at the QQQ. Here's the pivot that we're watching for the coming week. If we see a pullback, is to see would it be able to find support here, basically at this lower range of the expected move, and then pushes back up and take out this high here. So that's the positive or the upside scenario that we want to keep an eye on any kind of potential pullback. Now, if it continue to push up, then that's fine. We still maintain this higher high, higher low, this uptrend here. So that is fine. But if it doesn't, let's say, for example, it come down here and it break this support and pushes down into this 357 area, then we get a bounce back up to this high volume node, or even up here at this 370 area, back test this pivot and then pushes down into this 347, 340 zone, this low volume zone. Then again, we are looking at a possibility of a reversal and starting a downtrend with a lower low, lower high. Then we'd be looking at these 330 area, this gap fill here, and then down here at this high volume area, 317. And for the IWM, we see there's a little bit of a double bottom breakout last week, and it made a nice surge up to this 190, 150 area. So we're basically looking to see would it be able to continue to move up and come up to this 194 area, basically this area here, or would it pull back? And when it pulls back, we want to see would it be able to hold this pivot somewhere around this 186, 185 area and then pushes back up. Now, if it doesn't, let's say pull back and fail to hold this for support and come down to this 183, then dip into this 180 area, then all of a sudden we are looking at a reversal, higher high, higher low. I mean a lower high, a lower low coming down. So, and then we'd be watching these gap to get filled, this gap to get filled, and possibly coming down to this trend line near this 175 area. Now, if you'd like to see what sort of level that I'm watching for the next trading session, then go to my Substack page, and I have a trade plan for September 5th. 2023. So just go and check out this trade plan. And in this trade plan, I give you the different level that I'm watching here for the SPY and the ES, the E-mini S&P 500. So go ahead and go check it out and get some more detailed level that I'll be watching for on Tuesday when the market open for trading once again. So if you like the content in this video, be sure to smash that thumbs up to give it a like and help promote this video. And if you are new to this channel, click on the subscribe so you won't miss any content that I'll be posting in the future. Thank you for watching and stay safe.